It fits really quite nicely. We've got Mike Pedroni, who's the Chief Global Affairs Officer of ICI and ICI Global, the Investment Company Institute, which is the biggest, or actually globally the biggest trade association for mutual funds, and certainly the US one, and globally extremely active through its sister organization. I think we teed you up quite nicely, Mike, through the conversation we've just had with Alex to look at some of the investment strategies and trends. But with that, Mike, first of all, it's really nice to have you with us.
Great. Yeah, thanks to be here, Nick. The previous speaker was very interesting, and I think teed up a lot of interesting topics. So I'm looking forward to the discussion.
Interested, how have you seen the digital transformation evolve in the fund management industry? Not just to these investment classes, new investment classes, but just on the customer-facing side, on the risk management side, just in the evolution of the industry itself.
Yeah. So if you think about it, first of all, we are the UCITS and mutual funds and ETFs. So the classic vehicle that savers are using for their retirement, or if they're saving up to, purchase a home. And so this is a 35 trillion euro industry. So how our industry, adapts and adopts crypto is really, I think, a key question going forward. So far, I would say that there are a couple of key ways in which our members are using crypto. First, I would say there's the operational efficiencies that come from using things like the blockchain and streamlining back office work. But then secondly, there are the outward facing areas such as distribution and client facing tools, as you said. And what I'd like to do is really focus more on those outward facing and client facing elements. And, I would say that our members are in various stages of the path to adopting these. It's not a linear path for many of them. But in order to understand how it's coming into the industry, how these customer-facing improvements are happening, it's important to look at how retail funds, the types of funds that we represent, are being distributed. And in Europe, as I think as well as in the Asia Pacific region, mostly the distribution happens through banking relationships. Whereas in the United States, the other major jurisdiction, a lot of the distribution actually happens through retirement funds, which are held at your employer. So among our members, there's really a mix, and this way in which the retail client engages or comes into contact with retail funds really makes a difference in how they're adopting these. So, some of our members are providing their own direct digital access to clients through mobile apps. And you can imagine that is generally a little bit further along in the United States than in Europe. And some others are, using their banking partners and leveraging their banking partners for trying to really improve the client-facing experience. I mentioned the sort of dichotomy between the U.S. and Europe, Asia, but one of our members in Germany recently noted that they've had literally a doubling of growth in investment through self-directed and tech-enabled platforms. So it's really the area where you're seeing a significant growth in engagement. There's still a long way to go, though. One of the exciting things here is how does this savings vehicle reach new populations and new customers. That's certainly one of the areas we're looking at. But by and large, what we're seeing is really we're at an inflection point in the industry where more and more adoption of digital interface with customers is happening.
Interesting, because we have got this retail investor strategy coming up in Europe, which is looking at some of the capacity of individuals to really invest, to understand what they're investing in and how they receive the information. And maybe I draw a connection here to what we've seen in the crypto markets on the retail side in the last year or two. What lessons would you draw from the retail activity in crypto markets of the last years for your industry and for kind of retail investors' behavior around investment decisions that are driven through technological solutions?
Yeah, so you've really touched on a key point here, Nick, which is how do we, this is a key theme, how does our retail investment fund industry, the UCITS fund industry, take the good from the crypto asset space and how it has reached a new customer base? So how do we take the good parts of that, but also protect the good traditional parts of the consumer retail industry where we have strong regulation and so forth? We can get into that in a moment. But where I think the crypto industry has really done a job, and where a good job, and where we can draw lessons from are, well, first of all, crypto was born in a technology-based environment, from the beginning, almost by definition. And so, you have a fully mobile native format in the crypto asset space. And this really matters if you look at where our members are pushing new boundaries in terms of how they engage with their investors. A lot of it is through the mobile phone. I mean, we spend an inordinate amount of time on our phones, right? And so whether it's simplifying the process of investing, which is sort of the status quo, but making it easier, or whether it's going all the way to using a mobile native platform to help investors to personalize their experience and maybe even get personalized recommendations for investment. That's sort of the spectrum of where I think the retail fund industry is going. But that's inspired by this fully mobile native format that the crypto space has introduced. The second key feature of crypto assets that we can take some inspiration from are the low barriers to entry. It's very easy because of this native format, this mobile native format, for individuals to easily get involved into crypto. And we want to do the same thing with a couple of caveats for the retail investment fund industry, for UCITS, for instance. For better or for worse, there are advantages and disadvantages. The onboarding process in crypto is very simple. And this has somewhat fed the narrative, which there's some justification to it, that crypto is a less regulated, more decentralized form of investment. It's exciting, but of course, with excitement comes danger too. And those are the other lessons we draw from crypto: is where do we want to watch out for things that maybe aren't quite as good.
Thank you. You've touched on this already, but I think we see the benefit. In a way, you see kind of the competitive advantages that have driven interest into the crypto market, like removal of barriers to entry, let's say social media marketing, all these type of things. But we've also now entered the crypto winter, as it's called, and we've got Faria talk about that in a moment from Coinbase and how he sees how we might get out of that winter, what the next generation might be, the post-winter. But what lessons have you drawn from that and from FTX as the type of market structure, reliability, continuity between the fund management industry and the retail crypto space?
So one of the things, just drawing on what I've just gone through, the uptake of crypto assets has been very large in some jurisdictions in Europe. I mean, we have a couple of numbers here in Greece. 30% of savings are in crypto, according to one data source. In Romania, it's 37%. Even in the Netherlands, it's about 20%. So, there has been a very significant uptake in crypto investing, and so that then sets up this question you're asking, which is, what are the disadvantages? Where should we as the retail fund industry be very careful and make sure that we don't make some of those mistakes? The failure of FTX, as you said. And I think the key thing here is that we will continue to lean into what has propelled the UCITS and mutual fund and ETF industry for years and years, which is consumer protections are very strong. And you mentioned the retail investment strategy coming up. We will make sure that that continues to be the case, and where there can be improvements, we'll look to those. Strong regulatory frameworks and oversight for our industry is clearly going to be something that we continue to lean into. We've seen what happens when you don't have a good and stable regulatory framework. You mentioned FTX, but there are of course many other examples. And then third is investor education. We have, as an industry, have always cared a lot about making sure that investors know what it is and have access to usable information that helps them to understand what it is that they're investing in. So, consumer protection, regulation, oversight, in education, and then probably the final point I would say is that transparency is extremely important. And so, this is one of the areas where we have a fairly long history of reporting data and information that the crypto industry just hasn't gotten to that point yet. But again, what's exciting is to take the positives from crypto and the positives from the typical traditional UCITS product and combine them together to meet the needs, to create even better products and meet the needs of new and existing long-term individual investors.
And you're right, one can never sit on one's laurels, but the mutual fund management industry, at least from an EU regulatory perspective, can look on over 40 years of an established brand. It will take the crypto industry a bit longer to get there. And they didn't have as much, the fund management industry didn't have as many hiccups in the early stages of its evolution, let's put it like that. So I see the merits of that. Maybe last question, because I think you highlight very much the positives and the learnings. And I would like to move from crypto assets to the underlying technology, which is the DLT blockchain technology. And you already said that your members are adopting pilots in this area to see how to use it. Maybe you could elaborate a little bit on that. And we also had a number of interesting conversations, not just with Alex, differentiating between digitalized versions of underlying assets, so tokenized versions, for example, of funds or bonds, and this comparison to crypto assets.
That's right. So the way I think about it is there are, at least three exciting areas to look into going forward. The first is the one that's most obvious, which is how do you integrate crypto assets into a traditional portfolio? And that's the one that most people are thinking about, talking about. A couple of our largest members have recently launched funds that do try to provide access to crypto assets through a traditional retail product. But your question touches on other less obvious areas, at least for the retail industry. One is blockchain. So the blockchain is something that our members are using to reduce their operational costs, reduce their back office. Eventually, you could see blockchain becoming increasingly used in the distribution process. So there's very clearly a push in the direction of looking at where you can get efficiencies from using the blockchain. There's also importantly, and you discussed this, you and Alex were just discussing this, but tokenization is really an exciting area in the in the financial space and even very much so in the retail investment space. And you can see tokenization already being experimented with on, for instance, money funds. We've seen money funds. At least one of our members has marketed a tokenized money fund, which operates in some ways. You could think of it like an ETF in the sense that you can get, you can trade positions throughout the day. So that is certainly something that's interesting to track. But the other thing that tokenization can do for you is it can allow you actually to integrate less traditional assets into a portfolio, because with tokenization come all kinds of opportunities. For instance, you can tokenize parts of an asset. Think of we were recently having a discussion about a building. You can buy a piece of commercial real estate and tokenize different portions of it so that the safest portions of it can go into consumer-facing retail baskets, whereas the less liquid parts of it or less safe parts of it can be taken up by alternative asset managers and others who are more able to take on that risk and have less concern about consumer protection. So, I think that's a second area where tokenization is exciting. And then the third area where tokenization is the final point I would make is that we are seeing a major push in our industry to trying to personalize investment strategies. And, I think 10 years from now, you're probably going to see a lot less of, hey, let's purchase the gray blue fund. And instead, you're going to see, what is the Michael Pedroni fund? And that Michael Pedroni fund will be based on, the asset exposure and the risk exposure that is optimized to, my particular financial needs. And tokenization can be a key part of that as well.
I think I'm happy that you end on that one, because that was the theme, of course, of our conversation with Eric exactly a year ago, Eric Pan, your CEO. And there we took the example of ESG funds, so environmental preferences or social preferences of the investor. And you're right, tokenization allows a fragmenting down assets into much smaller parts and in a way democratizing access to assets. I always use the example of you can own 1,000 or 10,000 part of a Picasso. It's these type of elements. It's a real pleasure having you with us, Mike, and also for being so spirited as to the timing and the way you present things. Thank you very much indeed, and hopefully look forward to having ICI with us again next year.
My pleasure. Thank you, Nick.